Hey you guys, on this episode of the podcast, I've decided to bring back my first ever guest, Dylan Weston. Now, Dylan is a full-time trader, and he's spent the last 5 years building up a strategy and a portfolio that has made him millions of dollars. And today, he's going to be sharing with us his tips, how we can get started in trading, and the things to look out for in the stock market. So if that's the type of stuff that you guys are interested in learning, I highly recommend this episode, and I hope you guys enjoy it. So first of all, thanks for coming back on the podcast.
Thanks for having me.
How's things been since the last one?
It's been a long journey. I think at the time we're talking about the big Bitcoin dip. So I think I was down $1 million or so back then. Had a lot to learn. Did a lot of traveling. Had to find myself again. Because I hit all my big targets. I hit the big $1 million. Went past that. Lost $1 million. And then I had to really find out what am I doing in this world. So I feel like finally I'm on track. I feel like now what we'll talk about today is, all this investing stuff. That's my true passion, to help others. I've already helped myself. Now I need to help my friends, my family. And I hate to see them working so hard, wasting their lives on stuff that they don't want to do. I feel like the more we can help them with investing and helping them achieve financial freedom, then they can spend it with their family or doing whatever they want to do. I think that's just absolutely beautiful. So that's kind of my goal, my mission right now.
To educate and to help the people around you, pretty much.
Yeah.
Good. So what have you been doing for the last 4 or 5 years since your last job was Nando's, right?
Yeah.
What's been going on since then?
Luckily left that, rode the Bitcoin bull market up, then lost some money, then just had to hit the books really hard. I had to, because my main thing is I had read heaps and heaps of books on how to find a good stock or a good investment, how to get in, but I never built up my exit strategy. So now I feel like I've got my whole game plan down pat. I know how to get in, I know how to ride the entire wave, and then I know exactly when to get out. I just feel like I haven't been this prepared. I feel like every single day I look at my holes in my game, and I feel like I barely have any. So now this is why I'm very confident to give advice, not financial advice, but saying what I give, what I'm doing to other people, because I just can't see any flaws. So I feel very proud of myself, and I'm in a good place right now.
And it's clear we can see that. But before we continue, guys, with the podcast, I just want to say that we are not giving financial advice. We're not telling you what to buy. It's just our opinions, allegedly, blah, blah, blah. Do your own research. All right. So the last time we spoke, how much was the price of a Bitcoin?
I think it was probably, it had gone to $20,000 for one, and I think it crashed down to 4,000. I think it was around that time.
Yeah. And the end of the first bull market was late 2017, right? Yeah. That's when a lot of people lost their money. Yeah. And it's crazy how it's taken 3 years now?
3 years to make your money back.
To make your money back and some.
Yeah. Now it's probably double.
Yeah. So
$1,000 US.
Yeah. So that position where you lost $1 million, you probably made,
made a decent amount of it back.
A decent amount of that's come back.
Yeah.
And some.
I think the big key takeaway with Bitcoin is because it's a brand new asset class, a brand new investment, something that was only 10 years old. So these big volatile ups and downs, it's completely fine and it's normal. When you check the big crashes from Bitcoin, it's always at a higher price, and that's the sign of a healthy asset that's constantly trending up over the long term.
Yeah, sure. And what you said the other day about how when Bitcoin's really low, nobody wants to buy it, right?
Yeah.
But now everyone's downloading their eToro accounts or their whatever accounts, and everyone's trying to get in now. So for those people who aren't really sure about trading, Dylan, but obviously they want to make a bit of side money for whatever reasons, where should they start? It's do we need to get a certificate? Do we need to go to school? Do we need to download an online course? Where do we go?
I feel like, you should do, you don't have to go to uni for it. I don't know if that'll help much. I think it's a little bit outdated for these stocks because it's constantly changing.
Is there uni courses for stuff like this?
Kind of, yeah.
There are?
Yeah.
Okay.
I've seen some, I think there's some school, I searched about it where they talk about the trading and all that. They're just teaching you the indicators and how they were made, not teaching you how to use them.
Yep.
So I think it's a step behind.
It's just I guess the theory of how it's made up. but not really how to apply it.
Yeah. I feel like for me, there's two key books. I think Rich Dad Poor Dad to just teach the importance of investing in anything. The second one is another book, which is more about stocks, 0 to 1 by Peter Thiel. He's the guy that made PayPal alongside Elon Musk, billionaire technology investor. And I just believe 100% in his opinions that we should be investing in technology, things that are on the internet, because they can scale and grow extremely fast and they can pivot with the times. As the world changes, those companies can change with it, unlike, say, a standard restaurant. It's just stuck selling that one thing.
Yeah.
It's just, if you think about Netflix as an example compared to a restaurant can only have a certain amount of customers coming in the door. Right. And as more customers come in, it gets harder and harder and harder and harder. But compared to Netflix, they build the app once, they upload the content into this magical place in the cloud. And then if they have 100 customers at once, they don't notice it. If they have 1,000, 10,000, 1 million at once. So that's the benefit of these technology companies instead of brick and mortar traditional companies.
Yeah. And I think it's really starting to show now. Yeah. You look at all these tech companies, they're all-time highs now. Yeah. Right. And I think even after the crash in March last year, it's almost had no effect. If anything, it's been a positive. It's made it even better. Yeah. And what you're saying about restaurants as well, it's true, because restaurants, you can't, there is a ceiling to it. So if Nando's Chatson is making 40 grand in 2016 Boxing Day, then 2021 Boxing Day is going to be the same thing, 50 grand. Whereas with these tech companies, it's pretty much like you said, it's easy to scale. It's I
think the other thing with these investments as well, if you think of like something like Apple, the total addressable market, like the amount of customers they can serve, can constantly expand, because they started with the Mac, or computers. Then they can serve like a certain amount of people. They can only sell to a certain amount of people. Yeah. But then they have the iPhone. Now they can sell all those original people that have the Mac an iPhone. Then they get the earbuds, and it constantly multiplies on itself again and again and again. Mm-hmm. Now, they got the over the ear, and then probably they're going to have the car, and it's just going to keep on going on forever. So they can keep changing in that way. Mm-hmm. Yeah.
Yeah. So why do you think it's important for people to diversify their income and not extend just from the traditional business or traditional property investment? And why should we start investing in stocks?
Yeah, I feel like we should try to work in a technology company. That would be best. But I've come to the conclusion I'm not smart enough. It's very hard to work for those companies. So odds are we're working in a normal traditional brick and mortar. That's fine. Or have a job from one of those companies. That's fine. But we should hedge our bets with the opposite, which is the technology companies. So we can just say to ourselves, I can't start one of these. I can't work in one. I can only earn a decent salary from a standard job, but I should save my money and funnel it into the strongest investments in the whole entire world. Like now you think about Apple or any of these big tech companies, they're on another level. They're compounding, making 30% growth year on year on year on year. And you can't do that in any other traditional business.
Yeah.
So I think it's very important to hedge our bets, diversify out of brick and mortar into the future, into technology. And not only that, I feel like we shouldn't really invest, like say us as Australians, putting all of our money. What do most Australians do? They have a normal brick and mortar job, right? / business. Then they invest in real estate first, which I feel like is a mistake, because it's kind of doubling down on the exact same thing. Right? One just happens to sell something else, and one you just live in. What they should do first is diversify out of that, out of Australia into US, out into somewhere like China, and technology based. So now let's say if a recession hits Australia, we've been fortunate one hasn't really come, a hard one. Those stocks, you might lose your job, might go down, but those stocks and investments, because they're out of Australia, might keep you alive financially.
Yeah. It's always good to spread your money out, huh?
Yeah.
I mean, ever since I started trading, like I take the money from the business and pretty much just put it into stocks now. Yeah. So I don't really have a savings account anymore.
Yeah.
But I think last year was really educational for me in terms of learning how to manage my finances better and how to play it smarter, I guess. Yeah. Because you're right. If you just hanging on to cash, that cash isn't doing anything. But if we're putting it towards stock, right, we can, at least we're putting the cash to work. It's going to get us a return. Now, I think the big struggle that a lot of people have is, sure, you can say tech companies are great, and then people will buy it, right? Tech companies such as Apple, Amazon, Facebook, all the safe bets. But the thing is, how do you keep it easy? How do you know when to get in, when to get out? How do you know when to buy something, sell it, and then invest in something else? Because a lot of people, they don't have the time to really to spend on this. Because a lot of mums and dads, they got to raise their kids, they got to go to work, they got other commitments. How do they keep it easy?
Yeah. For me personally,
and still get optimal results.
Yeah. So I'm an investor on this website called eToro. It's like a social media trading platform where I'm like a popular investor. So kind of like a social media influencer. And I have to go through all of these tests to be approved to be this guy. And I've done that. So now friends and family can opt in to copy me, which is what I recommend them to do. But like the reason why I'm saying that is because the average person, to actually do this successfully for the long run, they really need to know what they're doing. So they need to hit the knowledge hard themselves. But if they don't, they probably shouldn't be investing their money with their own decisions, because it's going to, the stats are, people might be making money now because the market's hot, right?
Yes.
But not based on a strategy. Everything's going up. The thing is, 90% of people, they do lose money, right? Because they don't put that research in.
Yeah.
Right?
They don't know what they're doing.
Yeah. So the thing is with me, I've dedicated, like the last 8 years of my life to researching everything, right? How does a company work? What is technical analysis, which is based on the charts? And what you can do is you can have all these indicators and you can back test it to give you the odds of success. So I found a strategy, fortunately enough, that it proves that over time, if history repeats itself, the odds of success are 70% with all these investments and making about 30% per year. Yeah, so very fortunately, the market was extremely hot last year. We made 75%, beating the target. But that's not because I traded better or whatever. It's actually just because the market was hot. But I think in the long run, these big tech companies, which I like to focus on, they will constantly go up 30% if you just hold. So they can go up and down like crazy. But if you do a thing, dollar cost averaging, which is just chucking your money in from every paycheck, then you capture the average growth over time, and they're going up, 20 to 30% every year.
Sure. And do you want to quickly just explain what the difference is between a day trader and a long-term trader, and what do you think most people should, what strategy they should stick to?
Yeah, it's all the hype on, because it's kind of sexy on social media. These guys that are day trading, going into the positions, they're pressing all these buttons on their screen to make thousands and thousands of dollars. The thing is, what I found is I've studied that. I've studied long-term as well. Honestly, the long-term is better, especially in Australia, for two reasons. One, it's less work, right? So right now I can get away with just 1 hour a day of work, potentially even less, compared to those guys that are stuck in front of their screens and they've got no social life, right? But imagine we sell that to the audience. They're going to be like, well, that's boring. How can you make money by doing nothing? That's actually the thing. You're getting paid for your patience. The other thing is, with the day trading in Australia, you have to pay capital gains tax. And if it's you're buying and selling, then you have to pay at the maximum tax bracket, because it's short-term capital gains instead of long-term. And the thing with long-term, if you never sell, you don't have to pay tax at all. It's only once you sell that position. Sure. So if they're growing 20 or 30% every single year, that's tax-free in stocks. These day traders, they might be making 30% as well, but that's before tax. Once they pay the tax, they're left with 20% or less, and they did way more work. So it's just not wise to try and do that. It's harder, you make less money, and you waste your time.
So you would recommend people to pretty much go long, if that's the case?
Go long term. Go long term. Treat it as an investment, not a job. Day trading is like a job, Trade is an investment. Investment is money working for you while you sleep. You do nothing. It's better.
Yeah, fair enough. All right. So first you started with cryptocurrencies. I guess that was pretty much where you started. How did you get into stocks? How did you learn about that? And how did you know where to put your money in? I know obviously you said tech companies, but how did you adapt from that?
Well, yeah, the thing is, like, so when I was researching like investing and all of that, technically it is all stock related.
Yeah.
There are no books on cryptocurrencies. So I always had that play in the back of my mind. I just thought that cryptocurrencies were the better, like, opportunity cost. You're probably going to make more money in cryptocurrencies than stocks, and stocks, they're always going to be there. And cryptocurrency is a very time-based opportunity. But yeah, it's once that crash came, I started to realize I was taking on board too much risk. I should diversify into the other safer plays. And even, I had my mind wrapped around making 100%, 200%, 300% per year, which you can do with the cryptocurrencies, not so much the stocks. But what I've realized is, due to the compound effect, if you can constantly make 20% every single year over the course of your life, it's a fact that if you invest $100 every week from your paycheck at 20% and never sell, that will actually turn into, over the course of 50 years, $236 million. And that is a lot of money. And those numbers are low, $100 a week, 20% is very, very realistic.
20% per year?
Yeah, if you make 20% per year, leave it in there for the long term, just be really, really patient, slowly, and put $100 a week. So anyone can do it. Like, it's a dishwasher or whatever. You just need to be really patient. The more money you have, it will compound on itself, and it'll get larger and larger and larger. And at the 50-year mark, you'll be sitting on $236 million.
Sure.
So where can you do that? You cannot do that in any other thing, say like business. You could, but as you get more money, your workload will go up once again. Or say you're doing it in real estate, you're buying these houses and you're renting them out. Well, you're going to have a shitload of houses, right? It doesn't change with stocks, right? It can scale just like these technology companies. You click the button and you do nothing. You don't have tenants. You don't have any of this stuff, right? You don't have to maintain anything. You just hold it for the long term.
So what do you think the main advantage is over stocks and real estate? Is it the compound effect?
Yeah, it's that compound effect. Just less work, and the capital requirement, the upfront cost. A down deposit on a house. If you probably want to do it safely, you probably need 20% down deposit. So it's a big lump sum amount of money. Stocks these days, with platforms like eToro, you can start with, the minimum deposit to begin is $1,000, but after that you can just buy like $50 investments in like Amazon or whatever you want. It's so low, and even $1,000, it's barely anything. We can save that over 2 weeks compared to a house. We're gonna probably have to save up for 5 years. Yeah.
But, So you look at tech companies now; they're all-time highs. Bitcoin's an all-time high. I guess a lot of companies in America, pretty much really high right now, and there is a lot of speculation that there's going to be a crash or an adjustment. Is now the best time to start investing? Is now the best time, or should we wait? And if we do wait, when is the best time to get in?
I think the best time is always tomorrow, or always today. The sooner the better, because it's a fact that on average the market rises around 7 to 10% every single year. So if you're waiting, right, you're missing out on 10%. You started 2 years later, you missed out on 20%. Right, that's just the market average.
So the market average is 7 to 10%.
Yeah. Every single year.
Even if there's a crash.
Yeah. It factors in all of the crashes. And the crashes should be about 50%. That's normal for the stock market. This latest Corona one, I think it was 35%, 35 to 40% in just 4 weeks. But that's totally normal. These things will constantly come, and we just need to be prepared for it. We just need to realize the world isn't ending. It will continue to thrive. And, through technology, we'll always find a cure. Like, I'm always taking a bet that human intelligence will always find a way to solve these things. Like coronavirus, I feel like we're looking into the future. It won't be a thing. We'll solve it. It's nothing.
Okay. Yeah. Well, learning to live with it is also another thing too, right? It really has boosted the stock market, and it's helped a lot of businesses like Zoom. It's pretty much put them over the line in terms of growth.
I feel like we were heading down that track but it just fast tracked it. Like 5 years of progress was just done in 1 year.
Sure. So what does your portfolio look like right now?
Portfolio is mainly Bitcoin. It's got about 15% in Bitcoin. I feel like
How much percent, sorry?
about 15%.
15, yep.
Yep. So I feel like this year is Bitcoin's year, just like 2017 was Bitcoin's year. I feel like 2021, is Bitcoin's year again. I feel like it can get to around 100,000 US dollars, give or take, which is still a big move. Then the other big positions is Amazon. I think we got about 12 to 13% in Amazon. I think Jeff Bezos is the number one entrepreneur and businessman, investor even, of all time. I feel like no one's on his level, so I want to give him a lot of my capital. Then after that, we got the Apples, the Googles, the Facebooks, and a few big Chinese companies such as Tencent. That's one of the biggest technology companies in China. Alibaba, which is like the Chinese Amazon. Yeah. And then we do have an electric vehicle company, which is called BYD from China. The thought process from that is because if you look at electric vehicles in Australia and the US and all of that, it's kind of like a want. I want to have a Tesla, right? Or I want to have an electric vehicle. It will be good for the future, but right now it's a luxury. But in China, the pollution is so bad that they need electric vehicles now. So I'd rather buy a Chinese electric vehicle company. And out of all of these electric vehicle companies, none are really making any profit. And this BYD is like the only one that is. So that's the one I've chosen. But yeah, we have a whole heap of other technology, but they're at a very small amount, like just 1% or so. But yeah, tech-based portfolio.
Yeah. Awesome. Do you want to quickly explain to people what dollar cost averaging is and what the advantages of doing that is? Yeah. And if you recommend it or not? Yeah,
I definitely recommend it, especially for people starting, because it's the main way you lose in the stock market is from your emotions, right? If you just chuck in any amount of money and wait 10 years, you always win, right? If you diversify it across 100 stocks or whatever, you will always win. The thing is, if we had worked 5 years for our life savings and put it all in today, right? There's a saying in the stock market, the next day you're going to have bad luck and it's probably down 10%. And if you put your whole net worth in at once, losing 10% of it on paper is very scary and it plays on your emotions, and you might cut the investments and say, this trading stuff isn't good. And then you lock in that loss, right? So the best way to do it is, for someone that's new, is to just put in a little bit every single week as like a lifestyle change. Hey, I'm going to invest 10% of my income every week or every time the paycheck comes in. And that way, as it dips, I can see it as a bargain. I'm buying on the cheaper price. And it's not so scary that way. Start small and then slowly build it up. As you gain more confidence, put in bigger amounts of money.
So what does that look like? Say someone who has a salary of 70K a year. Yeah. How do I dollar cost average?
I would say you need to be investing at least 10% of your income minimum, absolute minimum. The more, the better. Yes.
Is that buying on a weekly basis or monthly basis, or how do people get started with dollar cost averaging?
I think as soon as the paycheck comes in, chuck it in. The more frequent, the better, because that way you're just buying. The more frequently you buy, the closer you are getting to that average of that 10%. But imagine your paycheck somehow came in once a year. That if you only bought once a year, it might be the top, it might be the bottom. You got no idea. So it's better just as soon as the paycheck comes in, invest.
Yeah, sure. And then with your portfolio at the moment, what targets have you set? Is it a 20% return every month? Yeah. Is it 10% yearly? So what are you looking for?
The market, normally goes up 10% on average. Yeah. Even if you can achieve that over the long term, you're going to be a multi-millionaire with small money, $100 a week. My goal is, through my knowledge, I feel like I can beat the market average and I can get at least 20%. That's my...
What's the market average, sorry?
10%.
10%.
Yeah,
around 10%. You're aiming for 20.
Yeah, at least 20. But this is over my whole entire life, to constantly get 20.
How realistic is that, though? If you were going to live for the next 50 years, do you reckon you could make 20%?
I'm confident I can do it. Yeah. I feel like I just have the mindset that I feel like I have the strategy today that works for today, but I have the awareness that the market's going to change in 5 years, and I have to constantly be studying for that change. That's where I feel like old guys like poor Warren Buffett, he was making big money in the early days because he knew how business and investing worked back then. He used to make like 50% a year, right? But as time progresses, he gets more and more outdated. and now he can't even beat the market average. So I feel like that's the one thing. I've studied all the best investors across the world. The one thing is they don't adapt with the times. Very few do.
Okay. Apart from tech companies, Dylan, where else do you ever think of looking outside of those companies? Is there anything that catches your eye at the moment that you feel like might benefit the portfolio? I know that companies personally for me, I look at Airbnb, and 9 out of 10 people I talk to tell me not to buy it because it's just too expensive right now. But I personally feel like Airbnb is, I wouldn't say undervalued, but I personally think like it's still a good buy, just because if you look not just at the stock price, but the fundamentals of that company, it's very well run. They have a lot of cash. And on top of that, it's the most disruptive company in the industry. So, and not just Airbnb, but there's a lot of companies that are just like that. But you hear from people saying, "Oh, it's overvalued. The price is too high." How do you know who to listen to? Is it really based on the price, or
I feel like like a lot of all of the textbooks, it's all Warren Buffett, and he always says like buy low or like buy at a discount and then sell higher. I think the world has changed. The world has changed from the way I like to see it is I like to buy expensive things, right? Because I feel like they're high quality. Something's cheap, it's from the $2 shop, right? If something crashed a lot, like say from the coronavirus crash in March, down 80%, that's a sign of weakness. That means we shouldn't buy it. If it crashed only 30%, right, that's a sign of strength. That is very strong. And if it breaks out to all-time highs, that's a sign it's even stronger. So something like Airbnb, it should be expensive, is my opinion. Because it's good, it's great.
Yeah. Is it a good buy right now?
I feel like it is. For me personally, I'm willing to dollar cost average Airbnb for the next 10 years. As time progresses, I'll update that view. But right now, I'm happy to buy these prices.
Sure. And that's Dylan's opinion. So he's not asking you to buy it. It's not financial advice. I just want to make that clear. I don't want to get in trouble. But yeah, all right. That's Airbnb. Let's talk about Bitcoin. So today is 37K. I think a couple of days ago it was 34K, and the all-time high is 40K, right? 41K. Is today a good time to buy? Yes or no?
Depends. If you already have a lot of Bitcoin, I wouldn't be buying. Okay. All right. If you don't have any Bitcoin, I'll get it in very quickly. I would dollar cost all the way down as it dips. And then as it goes and breaks out to the new all-time high, I'll stop buying if you don't have any Bitcoin. The thing is, because Bitcoin goes in those hype cycles, if you dollar cost Bitcoin all the way up, eventually it's probably going to result in a bubble where you're going to make a lot of money on paper, but then it's going to be followed by an 80% crash. Most bubbles end in 80% crashes.
Yeah.
It will probably go into another hype cycle 5 years down from the track. So if your time horizon is 10 years and you're willing to wait long term, then just keep dollar cost averaging, but get ready for the 80% crash. But if you're more short term, you need this capital to invest in your business, or you want to make money quickly so you can diversify into other stocks. I feel like I wouldn't really be buying above 42,000. Personally, I feel like it probably can only get to 100,000 realistically. So it's only like a double your money.
Do you want to quickly explain what a bull market is and what a hype cycle is and how they're created? Yeah.
So bull market is just the jargon for an uptrending market. So stock market, just like every other market, goes in cycles, uptrends and downtrends. Usually with the stock market, you're looking at a very long uptrend with small downtrends. I feel like Bitcoin's very unique because it has a lot of mainly retail investors. These are not the pros. So these guys are extremely, extremely emotional. And I think it results in price pumping like crazy because these guys are thinking they're getting rich. They're going to keep buying at higher and higher price, and they keep pushing it up into like this crazy bubble that's faster than an uptrend. But then as soon as they start losing money, it results in even a bigger and bigger crash. So I feel like Bitcoin's bull market, uptrending market lasts for about a year, but then the downtrend market lasts for like 3 years. So it's a very, very painful asset to be in. It's good while it lasts, but you got to be able to get out.
if we were dollar cost averaging and we were buying it on a regular basis, regardless of a crash or regardless whether it's reaching all-time highs, do you think we'd still be able to make 20% even during a bull market?
Yeah, I reckon. Even like, let's just say, so my thesis is Bitcoin was probably going to run up to around 100,000.
You think that it'll hit 100K before the end of the year?
I think so. Well, my plan is to sell just before that big psychological number, big whole number, because everybody's going to be thinking about selling at 100,000. So I want to sell around 95. I think it can get to 100. It can surpass that as well. It could go to 250. Who knows? But yeah, after that, I just feel like the crash is going to be that painful. If you got too much of your money in it, you could be on the sidelines just watching just negative every day. That's what I felt when I lost the million. So I just don't want to put myself in that situation again. But if you love Bitcoin and this is the asset that you want, then yeah, if you wait 10 years, I think even if you dollar cost all the way up, all the way back down through an 80% crash, wait long enough, I feel like you'll smash 20%. You'll smash the 20% target. I haven't checked the maths according to today, but if you dollar cost at any given time, you're usually making about 100% per year with Bitcoin, even including that big crash where it lost 80% of its value. Because imagine if you bought at 3,000, up until 30 now, it's a 10x. People forget, and they have short memories, that last March, it was at 3,000. So it's a 10x move. Since March, it's been like 9 months. 1,000% gain.
Well, when do you know is the best time to sell?
It's very difficult. For the average person, they won't know. That's where my value comes in with the eToros, because I study this. It is my whole life. All I do is this stuff. So I have built another short-term strategy within the long term. So I'm watching it every day, and as it starts to give signals that it's gone too high, then I'll follow those signals and I'll exit it. But an average person, they're not going to have any chance. That's the honest opinion. That's the truth.
How active are you on that on your eToro portfolio that's public to everyone?
I studied.
Are you selling every day or?
Not really selling, because I've studied those investments. They meet my technical analysis criteria. I'm most likely going to be holding them for 10 years. So whenever I buy something, I'm so confident that it's going to be good for the next 10 years. So, I really do all my homework. But yeah, all I do is like probably 1 hour a day max. The rest of the time is upgrading my skills, getting smarter so I can adapt with the times. That's where most of my work comes from.
So your portfolio is pretty much evolving.
Yeah, it's always evolving, always changing. Big thing is like right now, I kind of look at it like a soccer team. Bitcoin's kind of like our striker where we make most of our money. Eventually, we're going to have to cut Bitcoin off because it can get too old. It's like Ronaldo is getting too, past his prime. We're going to cut Bitcoin off one day. And now I'm already working on the next Bitcoin, right? The next big opportunity. I'm studying it now. So that's like what people don't realize. They look at the portfolio in eToro, it's like, oh yeah, it's great. It's up 75%, right? But I'm already preparing 1 to 2 years, 3 years in advance for the next thing, and I feel like I'm already onto it as well.
Yeah, that's awesome, man. That's awesome. Before we talk about more on the eToro side, I wanted to ask something that has made me curious: is what's going on with Jack Ma?
Jack Ma.
Right? Now that Jack Ma is the he is the owner of the biggest company in all of Asia.
Yeah.
Right. Lots of cash, Alibaba. Right. Now, this guy's, has he been found yet? Do you know?
I don't think so.
Probably not, right? Yeah. But given now that we know that this is the biggest businessman, the biggest company in all of China, and the government has the ability to take this guy out, is this? And no, we don't know we don't even know where he is. We don't know what the future is going to be. We don't know if the government's going to take over Alibaba. Are you still confident to put your money in Chinese companies?
I'm still confident because if you look at the incentives, I feel like if you're under the idea that China wants to be a major superpower, why would they hurt their strongest companies? Wouldn't they want to help them become even bigger, even better, so they can, in Alibaba's case, beat Amazon? There's no incentive to do something.
I don't think that's the plan. I know Alibaba's going to be around, and I'm pretty sure, whether it's Jack Ma or if it's the government, it's in the best interest for everyone to have.
Yeah.
But to have your director just completely disappear, it really shows that no matter how big the company gets, they can't surpass the control of, they can't decentralize the government control. So is it still a good idea to, put your money in there?
I feel like you should dabble a little bit. It can be a risk. It's probably a bigger risk than the US.
Yeah.
But I like to look at the track record of China. There has not been a country in the history of mankind to, evolve and advance so quickly like the Chinese. Yeah. So I respect that. I'm like, these buildings popping up left, right, and center. I like to follow the money, not follow like based on the rumor of what's happening right now. It is very concerning. I hope the guy's all right. But even if they become in control, I actually think they're pretty damn smart, these Chinese guys.
Where do you think Jack Ma is though?
I don't know. Maybe you never know. It could be the US media doing this. He's probably chilling in some island, He's relaxing. He's like,
screw this.
He's probably on a detox from technology.
Yeah.
He's no internet connection, just sipping his cocktails and
knowing he needs it. I think he needs it. Another one I want to talk about is Tesla. All-time high, and it's not stopping. And I think it crashed in March, and then and it's just been uphill ever since then. There really has been no stopping them. Yeah. And I feel like not just the stock price, but the product itself. I feel like the brand, it's cool. The product is cool and it works. In terms of investing, what do you think we should do? Are they in a bubble right now? And,
Yeah, it's definitely a tough one. Great company, great idea, smartest guy, Elon Musk ever. But yeah, the price is probably gone a little bit too far from reality. If you add up all of the largest, like Toyota and all the big car companies, you combine, I think it's the top 5 or something. Tesla's bigger than all of them combined. And then if you look on the streets, there are no Teslas. It is all Toyotas. So I think short term it's probably overvalued. Based on my analysis, it is in a bubble. It probably will crash 80% like what bubbles usually do. But could it not be a bubble? I could be wrong. This time could be different. But I just feel like eventually there's going to be a big correction. A lot of people will get scared. And once they do get scared, I'll be buying that fear for sure.
Sure.
Buy at a cheaper price.
So what you're saying is don't buy Tesla right now and then we'll wait.
Yeah.
Is that?
Or buy a very, very small amount and dollar cost it. When it crashes, start buying in bigger and bigger and bigger on the dip.
Sure. And do you want to just quickly explain what a bubble is and how to identify one and what we should do?
I feel like it's normally they say it's become irrational, right? It's no longer that it goes up 20% a year. I think what is Tesla, right? It's like up 700%, more than Bitcoin in 1 year. Now, has the company changed by 700% in 1 year? Yes or no? If the answer is no, which is my opinion, then it probably is not rational for the price to be so high. It's just everybody has been making money from Tesla. So they all then tell their friends, buy Tesla. I've made $10,000 from it. You should buy $10,000 worth too. And you're going to make another 10,000, right? Then he makes money. He tells his other friend, he tells his mum, his grandma, his wife, and everybody. They all chuck in their $10,000. And it's just, there's no sellers, But eventually one big rich guy who's a billionaire would have bought Tesla in the early days, 5 years ago, whatever. He's like, so you're telling me I've made 1,000% on my billions and I'm not going to take any of it out? He sells at the top, crashes the whole entire market because his money is bigger than all of them, the retail investors combined. And, it's just wise to, after you've made 1,000% on your money, to take a little bit out. And these big smart money, they're going to do that eventually. And the people that will lose, it's probably the average Joe that doesn't know what they're doing.
Mm-hmm. So that's what a bubble is. Yeah. So it's synonymous to a bull market, pretty much.
Yeah, but just even bigger. There's no one wants to sell. They just want to keep buying and telling everybody to buy.
Sure. So Dylan, what's the thought process behind making a trade? So if I gave you a company right now, what are the things that you look out for in a company to know whether it's a good buy or not?
Yeah. First thing is like scalability. So how easily can it grow? So that goes back to the Netflix example. Netflix can just grow across the whole entire internet in a day, whereas a restaurant or standard brick and mortar companies can't. They're restricted by that. Second is a big profit margin. Usually technology companies have this. The reason why I want this is because if they have a massive profit margin, they can take out that profit and then reinvest it back into marketing, growth, and research and development to create a new product, and then they grow again even faster. So that's the two big things. And then just, with the future trends, what is the future trends? For me, I feel like it's solar power, it's all technology. I feel like a computer chip is going to be in every single device. So I feel like computer chips are good. And looking at, is it something like is getting bigger in the future or getting smaller? Like I feel like we're going to use less oil. So I feel like oil companies are not a good bet for the next 10 years. What sometimes we overthink it. What is the next 10 years going to look like? I feel like we know. So let's just invest in that. What's going to be bigger in 10 years? Yeah.
Okay. So what are some hot companies you reckon?
Hot companies?
Yeah.
Oh, I just feel like, Amazon is just the best company ever. I think something that people don't realize is like Amazon is a robotics company. If you look at their warehouses, they have like one staff member and robots literally pick up the whole shelf and deliver it to him. And what is the benefit of robots? You probably buy a robot, costs $10,000. That's a quarter of a salary or even less, a fifth of a salary. He never sleeps, right? He never gets hungry. If he does get hungry, just give him a little bit more electricity, right? And then you can upgrade them with software. So they're going to get faster and smarter. That's another big trend, robots. But I feel like if you look at Jeff Bezos and follow where he's investing money, he can see the future and he's already preparing in advance to build, to buy a robotics company or whatever it happens to be, to always be the market leader. I feel like Amazon right now, it's like $1.5 trillion, I think, market cap. I feel like it can get to $100 trillion in our lifetime. I feel like people cannot see the power of that exponential return over time. I feel like Amazon will be a part of our everyday life for every human being on the planet.
Yeah, Amazon's a good one. But Amazon's very expensive at the moment.
Yeah,
I think it's about 3,100. I checked. Yeah. Do you think it'll go a lot higher than that this year?
Higher. This year it's hard to tell, but long term for sure.
Long term, yeah, definitely. Apart from stocks, man, have you thought about any other type of investments? About maybe going back to business, maybe, or buying a property, or?
I feel like I do want to do everything. I'm not just saying stocks is the answer. I feel like it's most of the answer for me personally. But as I make money, I will want to take less risk and diversify into properties and all of that. But for now, I just feel like there's too much money on the table in the stock market compared to real estate.
Yeah.
Real estate's still great, but it's a little bit too slow for me.
Sure. I think one of the main reasons why people like to invest in real estate is because you can simplify it, because it's a very straightforward process. It's you get the cash, you buy the house, you get an agent to look after that property for you, and it pays the bills, and the value skyrockets, right? And I mean, hopefully it skyrockets if you buy the right property. But if you look at stocks, to make returns, people have to be active. People need to buy, they need to sell, they need to research, they need to know. Whereas if you buy a house, it really is the best definition of passive income, right? But how do people invest in stocks and still have that peace of mind where they can relax, they can focus on their day job?
Yeah, I feel like we got to think at the end of the day, these are companies run by the smartest people ever, right? So it's not just like some sort of thing that's just flickering on the screen. It is a real life company. Say, like, as an example, what I like to tell people is, imagine you had like a block of land, right? Now compare that block of land with an identical block of land right next to it with a house on it. Which one's going to make more money? Obviously, the one with the house on it, because it can service more people, right? A family can live in it, right? So it's providing value to that family. Now imagine that same block of land, but instead of a single story house, you had a double story or a triple story townhouse. Now it's serving more people. It might make more money, right? More cash flow will be coming in. Now you get that same block of land, and now you put a Nike factory on it, right? Those Nikes, they're going to be pumping out and serving thousands of people every single week. Nike's probably going to make more money than the real estate. Now you get that same block of land, put it next door, next to the Nike factory, and you put that Netflix or Facebook, right? And you just got a few geeks on their computers, just typing, and they can service billions of people. So I always like to think back to that image. It always goes land, real estate, Nike, then Netflix.
Okay. Yeah. Interesting one. Now, man, let's try to wrap this up, but let's try to tell the people what's the easiest way to start trading and to start trading wisely and not just, you know what, fuck this. Here's $1,000. I'm gonna go nuts. Right? Where do we start?
I feel like people should do their research, read those books, Rich Dad Poor Dad, 0 to 1. If they don't have time for that, it's better to just find someone like using the website eToro, because you can check these guys like myself, popular investors. You can track their record, check their track record. You can see over time, are they profitable? You can see everything, every trade, every buy, every sell, you can see it. You can see if they're trending up over time. You can see their exact investments, how much are in these portfolios. It's better, in my opinion, I honestly believe it's better to trust someone on that website.
Sure. So anyone can go on eToro and they can see your personal portfolio, see what you're buying, how much % of it.
Yeah, and they can copy me, or they can, I'm not taking their funds. They can opt into copy. Whatever I do with my money, it's going to do it with theirs. I feel like this is the future of investing, social trading. Or if they don't want to do that, they can just buy the individual stocks that I have anyway in my portfolio. They can see it. The only downside is if you want to buy Amazon, you need to put $50 in. If you want to buy Facebook, you need to put $50 in. If you want to buy and I've got 30 of them. Yeah. So you're going to need big capital.
Yeah. Well, what's the main incentive to copy you as opposed to buying their own stocks? What's the main reason why someone should copy you instead?
I think you're just betting on my intelligence in this one thing. This is the only thing that I'm good at. I've put my whole life into this one thing. And you got to realize at the end of the day, it's a competition. If you have no knowledge, you're up against me, and you're up against people that have more experience than me, So it's not a safe world in it is safe if you know what you're doing. If you're going in there and you don't even know the rules of the game, we've got to remember 90% of people lose money in the stocks because they don't know what they're doing. They don't know what they're doing. But if you do know what you're doing, it's easy to make money. Yeah. So it's better to follow someone that knows what they're doing.
Yeah.
Yeah.
So by someone copying you, every trade you make, they basically copy.
Yep.
They don't have to open their
automatically.
Phone. They don't have to open the computer. They don't have to buy. They don't have to sell. All they got to do is just deposit more money by copying you.
Yeah. And it'll spread over all of my portfolio. Yeah, it's perfect solution for them.
Sure. And I definitely feel like that's probably the most convenient way to trade with the strategy. I guess the only barrier would be, do you trust this guy?
Yeah.
Right? But yeah, I feel, the way when we were kids, trading was completely different. You got to call the broker. It's a long system. There's a lot of contracts you got to sign. Whereas now, all you got to do is pretty much deposit that money and just press the copy button, put however much you want to copy, and it's transparent. If I go on your account, I can see what stocks that you're buying, what you're selling, and your reasons for it as well, because I know you like to update it. So I feel like eToro is the best place for the average person, like me or like most people, to start trading. With a strategy behind it, not just bullshit trading. Yeah.
I feel like as a side note, to go against what we're saying, if you have trust issues with me, or another guy, another great piece of advice is just buy the whole market average. Don't try to pick individual stocks. Or if you do, make sure 90% of your portfolio is the market average, because it always goes up 10% if you just are willing to hold. All right. Some years will be down, but it's going to average out to be 10%. Then say if you do like Tesla, just make sure it's 1%. So you got like 90% here, 1% Tesla, 1%, and your individual picks are very, very small. That's the safe way to do it. Just buy the whole market. The whole market always goes up. So that's the second piece of advice. Yeah.
My portfolio now is literally, I just bought a little bit of Bitcoin, a little bit of, when I say little bit, it's just money that I play for fun, just because I read the news, and I know there's a lot of hype behind the company, and it looks very positive. So I'll just buy a bit, right? But most of my money, I pretty much just copy you, because like me, I don't spend too much time looking at trades every day. At the same time, even if I do spend a lot of time, I'm not the best. I don't trust myself enough, and I know I'm just not capable enough of timing my investments. So that's why I prefer, I just copy you pretty much.
And that's wise of you to say that, to have the awareness, to know that is the best way to do it.
Yeah, it is.
Most people have massive egos, I want to do it myself, and they make money in the short term. In the long run, they become that statistic, 90% that lose.
Yeah, exactly. Or when I first started trading, I bought this and I bought this and I bought that. And man, after 3 months, like, you just get disinterested, you get bored. It's like buying a PS5 and then 2 months later you don't play it anymore. That's literally what I'm like. And I feel like that's what a lot of people are like when they work full time or they have a hobby or they have kids. I'd rather just put that money with someone who does this month to month, year to year. So that's pretty much why I copy you. So for those of you guys at home right now and who want to learn how to trade, put your money to work, I think downloading eToro, copying Dylan's portfolio is a good place to start. Now, again, I'm not telling you to do this. It's not financial advice. It's just my opinion. Do your own research, but that's how I did it. And and if people want to learn more about trading and people want to learn more about how to get started or need advice, what do you say to them?
They can just message me, say, on Instagram. I can let them know. We can have a chat. I'm always open. I'm going to answer every message that comes my way. Otherwise, let's harp on those books again. Rich Dad, Poor Dad, 0 to 1. And there's 2 awesome YouTube channels. One is called Anthony Pompliano, and the other one is called The Compound. These are just great to know everything about the stock market. They have the right mindset. It's the same mindset that I have, very similar. Those are the best YouTube channels. So I'll start watching them every day.
Awesome. Is there anything else that you want to mention on the pod?
That's it, man.
It's been awesome, bro. Thank you so much for coming down.
Thanks for having me.
See you at the next one.
Yep, that's it.
Beauty. Thanks.